These stocks are gaining ground and hitting new highs in 2024. These social media stocks are seizing the opportunities presented by digital connections, turning online interactions into profitable ventures. Pinterest. Strong earnings have propelled the company's stock to big gains. Meta Platforms. Its social media sites are benefiting from a rebound in online ad spending. Spotify. A new round of layoffs and cost controls have this stock up 7% already in 2024. Let's dive in. Here are the three social media stocks capitalizing on digital connections. Welcome to Timely Investment Research. Social media stocks have recovered nicely from the market downturn in 2022. The Global X Social Media ETF, which is comprised of 43 stocks, has gained 9.6% in the last 12 months. Since bottoming in November 2022, the exchange-traded fund is up 50%. It's a big reversal for the social media space, which was one of the hardest hit when investors sold out of equities in 2022. The large sell-off happened as the U.S. Federal Reserve aggressively raised interest rates to dampen a 40-year high inflation rate. The rebound is due to several factors that include an expected decline in interest rates, a resurgence in online ad spending, and the continued growth and popularity of social media sites, with consumers young and old spending more time and money on the platforms. Here are three social media stocks capitalizing on digital connections. Number 1. Pinterest. Shares of Pinterest have been on a run ever since the social media company reported its third quarter financial results at the end of October. Pinterest stock jumped 18% the day after the third quarter print, and the share price is now up nearly 30% in the last 6 months. Over the past year, the company's stock has gained 36%. It's a big reversal from 2022 when Pinterest shareholders had to watch as the stock cratered in what was a brutal bear market, especially for technology-related companies. The dark days of 2022 now seem like a distant memory after Pinterest reported third quarter earnings per share of 28 cents, which topped Wall Street estimates of 20 cents. Revenue for the 3 months ending September 30th rose 11% from a year earlier to $763.2 million, which was ahead of the $743.5 million expected among analysts. The company said that the number of global monthly active users on its platform rose 8% during third quarter from a year earlier to 482 million. Average revenue per user was $1.61, beating projections. Number 2. Meta Platforms. In all the hype around virtual reality and artificial intelligence, many investors have lost sight of the fact that Meta Platforms remains the parent company of both Facebook and Instagram, two of the biggest social media sites in the world. The company continues to derive the majority of its revenue from advertising on those platforms and plows most of its profits from social media into new ventures such as AI and the metaverse. Thanks to its profitability and diversification, Meta Platforms stock continues to power ahead, having gained 170% in the last 12 months. Meta Platforms stock has also recovered from a big sell-off during the 2022 bear market. While AI continues to draw attention to the stock, much of the rebound can be attributed to a recovery in online advertising on the company's social media sites. Meta Platforms' online ad sales in third quarter of last year grew by $27.71 billion, pushing overall revenue to the fastest rate of growth in 2 years. Number 3. Spotify. Spotify's stock has been red hot since the music streaming service announced in December that it's laying off 17% of its workforce in an effort to reduce costs. Spotify stock has risen 115% in the last 12 months, including a 4.6% gain so far just in the first few days of 2024. Company executives have made cost containment a central focus coming out of the pandemic, and it is paying off. Spotify reported a $69 million profit in third quarter of last year due largely to lower spending. The latest headcount reduction works out to 1,500 jobs worldwide. It comes after Spotify raised prices for its monthly subscriptions earlier in 2023, another move that drew praise from analysts and investors. Spotify is also continuing to expand into podcasts and audiobooks, which complement its focus on music. The company previously cut 8% of its workforce in the first half of 2023. Spotify stock has soared 177% from the all-time low it hit in November 2022. Thanks for spending some time with us today, Timely Investment Research. We're so glad you did. If you found value in today's video, please give us a like, hit that bell icon to never miss an upload, and hey, don't forget to subscribe.